All right, folks, welcome back to the podcast where we cut through the noise and get straight to the charts. It's your boy George, and today we're diving into something big. I'm talking about the S&P 500 weekly chart, and spoiler alert, the bears are sharpening their claws. This is not the time to be complacent, my friends. The warning signs are flashing, and today we're breaking it all down in plain English. Let's go! All right, so let's start with the big picture. The S&P 500 has been on a tear, climbing back near its all-time highs. On the surface, everything looks great, right? Wrong. Here's the thing, beneath the surface, momentum is cracking. Let's talk about the RSI. That's the relative strength index for my newer listeners, a momentum indicator that tells us when the market's got too much gas or none left in the tank. And guess what? Right now the RSI is saying, bulls, you're running on fumes. We've got a classic case of bearish divergence. Price is making higher highs, woohoo! But RSI is making lower highs. That's a giant red flag, folks. It's like seeing smoke before a fire. And if history tells us anything, this could get ugly fast. Now, let me take you on a quick trip down memory lane. February 2020, we saw the same setup, bearish divergence. What happened next? The COVID crash, boom, markets tanked. January 2022, another divergence, and what did we get? A full year of pain as the S&P dropped over 20%. And now here we are in December 2024. Look at the charts, it's déjà vu all over again. Same divergence, same pattern. Now, I'm not saying we're guaranteed a crash tomorrow, but let me ask you this. Do you really think this time is different? My answer, probably not. All right, let's talk about the setup. Where are we on the chart right now? We're sitting just below a major resistance level, somewhere around 6,050 to 6,100. This is a key decision zone. If the bulls can't push through, and trust me, with this RSI weakness, they probably can't, the market is primed for a reversal. So here's the playbook. If we break below 5,800, that's your signal. The bears will take control, and it's going to be a slippery slope from there. Targets? Start looking at 5,400. That's the first real support. But if this thing really unravels, don't rule out 5,200. But hey, don't take my word for it. The charts are doing all the talking. This bearish divergence hasn't lied to us yet. Now, some of you might be thinking, but George, the market is resilient, the economy is strong. And sure, the SP's been defying gravity. But let me tell you something. Gravity always wins. The market doesn't care about your optimism. Patterns repeat because human behavior doesn't change. So here's the deal. If you're holding long positions, now is the time to tighten up those stops. If you're sitting on big profits, consider locking some of it in. And if you're feeling bold, look at hedging or even shorting if this thing breaks down. This is not the time to get lazy. All right, folks, let's wrap this up. The S&P 500 is standing on thin ice, and bearish divergence is the crack you don't want to ignore. Remember, it's not about predicting the future, it's about managing risk. The signs are there. Now it's up to you to take action. Thanks for tuning into today's episode. If you got a value out of this, hit that like button, leave a review, or share it with someone who needs to hear this. And as always, keep your eyes on the charts and your stops tight. Until next time, this is George signing off. Stay safe, trade smart, and remember, the bears are patient, but they always show up. Catch you next time.